things come up at renewal. Maybe you got a car that now, now you don't qualify because that car payment or whatever. So it's a good conversation to have way in advance so that you can get the best rate.
So if somebody is maybe dealing with a traditional bank and they know that their mortgage is coming up within 5 or 6 months, reaching out to someone like you as a broker to say, okay, let's do some homework. Let's look at what things may happen in the future. So again, like a vehicle payment.
Right. So when I look at a file, you got to remember we deal with 50 lenders, banks, and credit unions, right? So when I look at your file, when you're on renewal, that payment is based on your remaining amortization. So sometimes going to another institution, not only for a better rate, but there's ways that we can extend that amortization for you without having to go back to a law firm. Doesn't always work in every case, but that also helps with the rate being a bit higher than you originally had, so it brings down that payment for you.
Do you find that a lot of Canadians are extending their amortization because maybe people were a little spoiled with, a 1.9% or 2% interest rate, and now obviously rates are a bit higher?
We do see that, yeah. So a lot of people are like, oh, that payment's not where I want to be right now. So there are other ways to do it. And we try on what's called a transfer switch to help out and extend that amortization back. There are restrictions when you do that. Or you can, go back to a lawyer, re-register, and take that 30-year amortization at that time.